Hello and welcome to another Major Market Movements End of the Week Market Review for October 30th, 2015. I'm Quad G, and this is a very special video. We're going to cover the PM complex, but this will be the last end of the week market review video for Major Market Movements. That's right, I'm going to be closing the doors of Major Market Movements and moving on to doing something else. But I want to leave you with a cliffhanger, and so in this particular video, we're going to cover all the major long-term indicators that I see for the PM complex, and to give you something to go off of for the years ahead in my absence, and also to dispel any rumors. I just want to let you all know that I'm doing fine. I'm not dying, and I'm not going to jail, and I'm not being hunted down by the gold cartel. Well, at least that I'm aware of. But I do have to move along for reasons I cannot disclose, and I just trust that you have faith in the fact that this move has to be done, and for good reason. So we'll go ahead and start off here, looking at the gold chart, and this is the Elliott wave count that I prefer for the long term. It's based off a few ideas, and I want to start off here with the Gold Confiscation Act in the United States of America back in 1933, and that radically changed the way that the United States government was handling the valuation of gold. They basically ratcheted up the value from somewhere around $20 up to $35, which is a substantial move. Not quite double, but fairly close, in an attempt to generate some inflation. And so I consider the 20 some odd dollar bottom in that year as really the start of this major generational wave one to the upside, which finished in 1980. So from 1933 to 1980, it was about a 47-year rise into a wave one. And depending on how you measure it, it's roughly around a 33-fold move from that low in 1933, give or take a few. Um, but we'll go with 33 for this particular video. And it lasted 47 years. And then we had roughly a 20-year correction from 1980 down into 2000, 1999. And that was a wave 2 sharp correction. And then from there, we started this move to the upside that lasted from 1999 into 2011. So it was about a 12-year rise, and it was a 7.5-fold move from the bottom to the top. So this move here looks to me as though, because it's smaller and took less time than this wave one here, I favor this move to the upside as being a sub-wave one of a larger generational wave three. And since wave one took about 47 years and was a 33-fold move, wave three typically should be at least slightly larger in time and price than wave one. So I think we're still early on into this massive wave three to the upside. We still got a subwave 3 to go, and I think it's very possible that once the subwave 2 correction is complete, which I think if it's not completed already, I think we could still see one more lower low, possibly into 2016, depending, and we'll get into that. But once this wave 2 bottom is complete, however, I do think we'll see another charge to the upside into wave 3 of 3. Now, I do think it's very possible that this sub 3 could be a 10-fold move. So if our bottom is, say, somewhere around 1034, 1030, let's say, then a 10-fold move would cause the price to soar up to, say, $10,300 or so for subwave 3. However, even at $10,300, that's still nowhere close to what a 33-fold move is off of this major wave 2 bottom. So wave 3 has to be larger than wave 1. Well, I shouldn't say has to be, but it most typically is. And so even at a 33-fold move off of the wave 2 bottom, which was at $251, you come up with a very small conservative estimate of $8,283 for the completed wave 3 move in the green here. But oftentimes wave 3 is 1.618 times the size of wave 1. So if we take that valuation and times it by 1.618, we get a potential target of 13,401 for the final wave 3 to the upside. And you know, for you conspiratorialist numerologists out there, that's awfully close to 13,333. Spooky stuff, right? I'm just kidding. Anyway, but 13,000 is a possible target in this run based upon measuring off of what's been taking shape recently. And it may take somewhere to 47 plus years to get there, which is possibly the year 2046 or even longer. So could it move quicker than that in time? Yeah, possibly. But that's still plenty of time left to go. Here we are in 2015, so you got roughly, 30 some odd years to go in this massive wave 3 move to the upside. And of course, if the price gets up to $13,000 for an ounce of gold, is the valuation really meaningful anymore? I don't know. It seems like cash becomes more and more relevant. The higher and higher the price comes up, moves up as far as value by gold. So anyway, that's the move that I favor, and I do think this wave 2 could be completing fairly soon. And I'll show you some further evidence in the other parts of the gold or the PM complex as well. I want to zoom in on, this is a monthly chart. I do want to move in on let's start with the weekly chart. Move in on this. I got to put this back in auto. We've got this choppy move to the downside. There's a number of different ways you can count this, and as far as Elliott wave terms are concerned, but the key level right now is the last swing high, the midterm swing high that we had right here at about 1232. I'll shade that red as for resistance. Okay, so while we're below that level, I still think there might be an opportunity for at least one more incremental low underneath 1071 or so. I see that as having some potential. However, once the price moves up, if the price moves up from here and takes out 12,032 or 1,232, getting ahead of myself there, or even challenges it, then that's, I think, going to be a really great indication that this bottom right here is indeed finished, and we are starting in advance to the upside, likely to come up here fairly quickly to challenge this black trend line to the down right now from these last two highs, long-term highs, to test it at least a third time. Could it break through? Sure. But there's going to be a significant amount of resistance up there as well. You got some right here, this breakdown point right about 1521. That's going to be a key level of resistance as well. But the key to unlocking that potential to the upside is at 1232. So pay very close attention to the attitude of the wave structures going up into that level. Okay, let's go ahead and move along to silver here. This is long-term silver. This is the count that I favor. It suggests that back in 1980 we had a generational high, again up into $50. So I think down here into this $3.50 move, that was a generational 2 correction, and then since then we've worked on a sub 1, sub 2, 3, 4, and 5 into a sub wave of 3. Actually, I don't have the generational 3 on there, but you get the idea. Generational 3 would be the arrows going back and forth, similar to what I showed you in the gold chart. But anyway, this is a sub 1. It came up quickly as an impulse to challenge the generational wave 1 high back in 1980 at $50. That was a 14-fold move from the 1350 bottom. And since then, I think we've been working on a possible handle of a generational cup and handle formation that started in 1980 as the left rim came down into the cup bottom and since completed the right rim, and now we're working on the handle, waiting for it to complete. So we're going to go ahead and zoom in on the handle, give you an idea of where we're at here. All right, so from the wave 1 high here, I'm seeing it as an ABC down. We got a sideways X move, and then a wave A, a B, and now we're working on a final C to the downside with a impulsive 5-wave move, which is getting very close to completion. And we'll zoom in a little bit more. So the way I see it is we've got a wave 1 here, we've got an A, B, C flat for wave 2, we got a wave 3 to the downside, and then we a very sharp move, which sharp move down, sharp move up. We call that an atom bottom, and we've got a 3-wave move to the upside that's sharp here. So that alternates with the wave 2 flat. That's good Elliott wave maneuver. And now we're working on the final 5th to the downside, which we have wave 1, wave 2 sharp, wave 3, and now we're working on this flat correction with it looks like an expanded flat with an A up, an extended B, and now working on this potential 5-wave move to the upside for wave C of 4. And we'll zoom in on this a bit further. This is a weekly, so I'm going to go to a daily just to give some more detail. Back up here. Okay, so we got wave 1, and you can see the sharp move, ABC, zigzag maneuver up into wave 2, sharp, wave 3 completed, and then we have wave A, B, and now working on C, which may not be finished yet. I do think we've got a wave 1, a wave 2, wave 3, working on a wave 4 sharp at the moment, and we may get one more push higher into 5 of C, maybe testing this purple trend line for a third time. And then from there, we may see another sell-off to the downside while we're below this last midterm swing high there at 1775. While we're below that red line, I think the probabilities are still in line for a potential sell-off to give us one more incremental low under Atom here, which is about 13.99, or actually this low here, this wave below 13.96, somewhere in there. So into the upper to mid 13s is what I suspect is where you may find the completion of this wave 5 maneuver. It's more likely going to be a 5. Well, I shouldn't say that. It may be a 3-wave maneuver. These other legs to the downside in 1 and 3 were very choppy and could be counted as three-wave moves. So wave 5 to the downside probably going to be a 3-wave move as well as a more or less an expanding ending diagonal which I'll paint up here real quick in purple. There. So I think this market would be hard pressed to move below this lower purple trend line. I think it'll stop short of hitting that line before it finds its final resting place, and then a quick move right back up. And with the ending diagonal, the resulting move out of a bottom such as this is a sharp impulsive drive that comes up and engulfs the entire choppy move down of the ending diagonal, which the origination point was all the way up here at 1840-ish. So that's what I would expect. Possibly either later here in 2015 or early 2016, you may see the end of silver, major end of silver bottom, and then you would want to see a very quick impulsive drive right back up into 1840-ish preferably, certainly above 1775. The other scenario, which I don't have painted up here, is if we do break 1775 sooner rather than later, and that's a good indication that this bottom is locked in. We're done with the silver correction, long-term silver correction, and we stand very good chances of seeing silver taking off from this point into the massive wave 3 that I showed you previously. Which, let's see, do I have it on this chart? Let me go to the weekly again. All right, so wave 3 is ahead after this bottom is completed, and I would say at a minimum it would reach up to about $180 an ounce to as high as $300+ an ounce for wave 3. And then once wave 3 is finished, then you got wave 4 and wave 5 yet to go, which would be years to follow. Okay, let's move on to this chart. Now this is a Bollinger Band chart on the weekly time scale, and this oscillator below is a measure of Bollinger Band width. So what it means is when this oscillator is down low here in at about the 0.08, 0.09 level, that means the width of the Bollinger Band is very small and is very tight. You're getting a pinch in the Bollinger Band. And then, of course, when you move up and you get these peaks, these are where the Bollinger Bands are the furthest apart. Similar to this peak here, you can see that the Bollinger Bands are way spread out there. So what I've noticed over time is that the extremes in the width of the Bollinger Band often show places where significant tops and bottoms will finish. So when the Bollinger Band is pinched, you can see it right here, very small, you form a bottom. And from that bottom, you see this impulsive move to the upside. And that impulsive drive and that end of this quick move up stops at a place where the Bollinger Bands are very wide. In this case, at the 0.40 or higher level, you're starting to get into overbought territory. And then the price settled right back down again. It consolidated. The Bollinger Bands pinched. The width shrunk again. And right here, again, we see another significant bottom and an impulsive rise out of that pinch. And it repeats over and over. Same thing here. Top is shows a wide expansion of the weekly Bollinger Band, sideways consolidation into a bottom, and then another impulsive drive to the upside. But also moves to the downside, sharp moves to the downside can also complete when the Bollinger Bands are very wide. So you can see in here, let me zoom in on this so you can get some better detail. So you can see with this peak in the width of the Bollinger Band, we see that form a bottom, help assist with the bottom with this impulsive drive to the downside. And then from there, you saw the price rise, all right? And this scenario plays out multiple times throughout this silver movement over the last several years. And now we're coming up again. Let me back up here, where the price is moving to the downside, but it is slowing down and is allowing the Bollinger Bands to pinch in again. And you see the width of the Bollinger Bands are small yet again, where we've seen other major bottoms. You see one of the last major pinches here was back in 2010, right at this low here in the market, and before it took off in a very excited, impulsive move to the upside. So I think we're right in that territory, very, very close to completing this pinch in the Bollinger Band. And once it's finished, we could see another strong, impulsive drive to the upside. All right, let's cover GDX as well. Here's long-term GDX. I do think we completed a major wave one up in 2008, and since then we've been into a long corrective series sideways, and we've got wave A completed in the 2008 sell-off. The rise out of wave A formed a wave B up into 2011, and since then we've been working on this wave C of 2 to the downside, which may not be finished yet. So we'll zoom in on that. I want to point out too that we've got a massive rise in volume as the price is sold off over the past few years. See, look at this major sell-off right here in comparison. The volume barely went anywhere. But now that we're starting to consolidate sideways and to shrink slightly to the downside, making incremental lows, the volume is going off the charts. It's just going bonkers. And this to me is an indication of we've got old positions that may have been in place with certain funds or individual investors, and they're seeing the break of the 2008 low at roughly about $15, $16, and they're panicking out. They're giving up the ghost, so to speak. They don't like where this market's headed, and they're selling off. But I do think they're selling off at a bad time. I mean, you're supposed to sell at the top and buy at the bottom, right? Well, I do think somebody's buying at this bottom, and that's why you're getting this massive moves in volume, as you've got old money, old hands selling out, capitulating at the same time that new interest is coming in and buying it up. And that's causing the price to just slowly chop downwards as the bears have a slight advantage, but it is they're selling into stronger hands eventually, that I think will cause the price to turn around here pretty soon. So let's go into this with a little bit more detail. I see a couple different counts here. I slightly favor the impulsive move to the downside, the 1, 2, 3, 4, 5 count. Though I also see the double zigzag count here. It could possibly be playing out as well. So we've got A, B, C, and an X with another A, B triangle, which would need another impulse to the downside. And that could be playing out. Or the other scenario is we got a wave 1 here, wave 2, and then we've got a wave 1, a sub-wave 1, sub 2, sub 3, triangle sub 4, and a sub 5 into this alternate wave 3 here. And then we've chopped sideways into a wave 4, and now we're working on the final fifth to the downside here. Either way, we're getting, no matter how you want to count it, we're getting really darn close to a bottom here. And so we'll zoom in this a little bit further. Let me zoom in here on the dollar chart, or the daily chart. I want to get rid of the volume just to get rid of the clutter. So that's let's assume for a moment that working on a final fifth to the downside to mirror what I'm seeing in gold and silver. All right. So we've got from wave 4, we've got sub 1, sub 2, we've got a sub 3, and now we're working on this corrective move to this sideways for sub wave 4 here, this green 4, which we've got wave A complete, we've got wave B to the downside complete. Go in a little bit further, get a little bit more detail. So we had an ABC move up into A, and an ABC move down into an extended B, and now we're working on what I think is going to be a 5-wave move for an expanded 335 flat correction. We've got wave 1, wave 2, sharp, wave 3, wave 4. It's also looking sharp. I've got it listed as flat, but this is looking more like a sharp correction. So we may not get any alternation here. And or there, I guess there is a chance that this could be a sub A, we get a sub B and a sub C. That would make for a flat correction possibility there. But whatever the case, I do think that this corrective move to the downside, I would prefer that it stay above 1470 or so. Maybe a quick intraday jab below would be okay as a kiss of wave 1, and that. But from there, we need to see another impulsive drive up into wave 5 of C of 4. And then once that's finished, we got wave 5 of 5, the final fifth to the downside, yet to be seen, very likely to take out 1262, and then from there, a major resting place for this sell-off, for this massive correction, and then the launching pad for a very strong impulsive move to the upside, which we'll back out here again. I think it's very possible for wave C to go up to about 120 points as a minimum, 10 times off of whatever bottom we get here. So we settle in around about $12 for GDX. I would be not surprised for wave 3 to the upside to finish 10 times higher, around 120 plus in value. Also want to point out, here is the HUI, which is the Gold Bugs Index ratio with gold. So with this chart, when the price is moving down, you're seeing the value of gold mining stocks go down more than the value of gold. So you're getting a contraction between the price of gold and the price of the mining stocks. And gold is what miners do. That's what they make. That's their product. So you can see here when we got into this situation where the valuation of gold mining stocks was relatively low compared to the price of gold, you saw a major turnaround, and you started seeing out of that 2000 low, you started to see the spike to the upside in the price of miners, which eclipsed the rise in gold for the first 3 years or so into 2003. You just saw the miners take off while the price of gold lagged behind in percentage terms. But since that high, gold has certainly caught up and has forced this ratio to move down to the point now that we're well below the 2000 low in the PM complex. So we're well into oversold territory with regards to stocks versus their product. So there's got to be a reconciliation here somewhere, somehow. I think the miners are just meeting down profusely, and I do think they're going to turn around fairly soon. And once they do, I would expect this ratio to shoot right back up here into a 0.6 or higher. And that means that in percentage terms, stocks, gold mining stocks are going to be advancing several times, as far as percentage terms go, several times more than gold at the start, and even silver here. We'll go look at Huey versus silver. And here's a 2000 low. You see we're just underneath that same low again, showing the oversold nature of mining stocks again, versus what they're peddling. So again, I see a potential for a huge reconciliation here between the value of the stock and the product in which they're selling. So so this concludes my final coverage of the PM complex for major market movements. I just want to thank all my supporters out there that you've supported this dream of major market movements over the years. And I am just very grateful, and I wish you all the best. I wish you smooth sailing and some good hunting in the years ahead, chasing down these markets. So that's it for now. Adios.